Okay, so we're gonna go ahead and get started here, everyone. Thank you for joining us. If you're joining us live, we greatly appreciate it. I specifically wanted to talk about, have discussion on bankruptcy, as I've called it, the bankruptcy discussion, because I feel like a lot of people in the real estate industry haven't really been talking about what's been going on with the increase in filings for bankruptcies this year. And I think what's contributed a lot to the increase has been, of course, inflation. A lot of people, their forbearances that they were in are no longer there, which forbearance was when during COVID, people set up an arrangement with their loan servicing companies so where they would have to pay less in their mortgage per month or not have to pay the mortgage at all. And then, of course, people also have to now pay for their student loan debts. Some people have been laid off from their job situations as well. So definitely a lot has been going on. And just to give you an idea of the increased amounts, based on uscourts.gov, as of October 26th, there has been about a 13% increase in personal bankruptcy filings and about 30% increase in business bankruptcy filings. So it's definitely been an increase for the year, and we're looking to see how everything going on now is going to impact going forward. So all this next half hour, we're going to talk about what's been going on this year, what to expect next year, how it's going to impact the real estate market as a whole, what is the bankruptcy process like, and what people can do to prevent from going into bankruptcy if possible, and then advice for sellers and buyers who are on the verge of filing bankruptcy. And so I've asked bankruptcy attorney Shaunay Steel to join us today in this interview so that we can all learn more about what we can expect and how to best prepare if anyone has to go through or someone has to go through that. She's very knowledgeable in this topic. She's been a bankruptcy attorney for over 10 years. She's had leadership roles with large corporations as well. And she currently owns her own practice where she practices in Michigan and Ohio. So thank you, Shaunay, for joining. I really appreciate you taking out the time out of your day to have this discussion.
It's my pleasure.
Okay. And so the first question, of course, is just going to be, what have you seen in your business for bankruptcy filings that's been different for you, or, even just as a whole? And then what are you expecting we expect to happen next year?
Of course, we're coming straight out of a pandemic, so things are a little bit different, right? So some of the issues that happened pre-pandemic, if we zone in post-pandemic, what we're seeing basically is we're seeing a savvier client come through the door. They have questions. They want to know how this bankruptcy is going to affect them moving forward. They're asking more questions, doing more due diligence, investigating a lot more. There's also other issues arising from the court. During the pandemic, there were a lot of SBA loans given out, right? So we have filings, and now we have to make sure that we're doing our due diligence, right, with these bankruptcies, making sure that if these clients did have businesses, what's going on with the businesses? Is it a successful business? Is it asset-based business? Did the business close down? Did you take an SBA loan out? Are you disclosing it on your schedules and statements? So those are just some of the issues that we're actually catching up to from the pandemic. Another issue we're experiencing is the equity in homes, right? So now we're in a market right now, as you said, where it's, a seller's market right now, if that makes sense, where
it's still a seller's market, but I would say it's a shifting seller's market, not what we've seen the past few years, but there still are bidding wars on homes and there's still low inventory. And until we have more sellers than we have buyers, it'll stay overall seller's market.
Okay, so what we're seeing is, I don't know if that impacts how this impacts, but we're seeing equity in homes. So the question becomes in the bankruptcy, can we exempt this property? And when I say exempt this property, can we protect this property, right? If we can't protect this property, what are the options? Are we going to choose a Chapter 7 or a Chapter 13? Chapter 7 mean, if you want me to explain right now, I know it comes later in your questioning. So I actually hold off for that, but those are just some of the differences that are rising that may have been some of the same issues pre-pandemic, but now it's full front center right now post-pandemic.
Okay. And then what would you say you expect for next year and then your future as well?
We're expecting an increase in filings. We're expecting the filings to go back to what they were or possibly more, right? some of the issues that you discussed, dealing with the forbearance programs stopping with the mortgage companies, so they don't have their forbearance. So the issue becomes, can I afford this house? If I can't afford this house, can I afford to catch up on my payments from this house in order to continue to keep this house? So there's a lot of points where bankruptcy and real estate definitely interact.
Okay, well, thank you. And can you just discuss briefly the difference of when someone files personal bankruptcy versus business bankruptcy? I understand that sometimes a business bankruptcy can be a strategy. You don't necessarily have to close the business, and then with personal, obviously it can impact your credit. So if you could talk more about that, would be great.
That's great. Chapter seven, typical bankruptcy, right? The most common that we know, right? You put everything in the bankruptcy outside of student loans and whatever's not dischargeable, right? And then it goes away, gets discharged. And when I mean discharge means that basically means you don't legally have to repay that debt back. Chapter 13, I always tell clients, it's like a payment plan over 3 to 5 years. So you're basically paying a monthly on all your debt. There's a Chapter 13 plan involved, and we propose that, and then there's a lot of negotiation. But if we can get a plan confirmed, generally it's between 3 to 5 years.
Okay.
And you're making a payment on all your debt, just clarification
What did you
purpose.
say?
You're making a payment on all your debt all at once in one lump sum payment.
Oh, okay. Wow. Okay. So definitely important to know what is the best strategy for each person. Can you talk a little bit about depending on when you have a client and they're considering filing bankruptcy on the personal side, can you talk about how you determine what is the best option for them?
Each client is different. I kind of try to customize my consultation with them based on their needs, right? So the first thing we're going to discuss is we're going to discuss what your debts are. We're going to discuss, why are you calling me, right? What's going on? What's the anxiety? What brought you to me, right? A lot of times it could be a garnishment. A lot of times it can be a potential foreclosure on a property. It can be an accident. It's numerous reasons why someone gets in contact with you, right? But by the time they get in contact with me, they're very stressed and they just want some form of relief. They want some kind of education. They want some kind of guidance and some information on what to do next, right? So one of the things I evaluate, especially when it comes to business owners, is a lot of times business owners may take out a debt, right? And the debt's for the business, but a lot of times they may not have the business credit. So they'll serve as a personal guarantor. So on a lot of these debts, it makes sense sometimes just to do personal, even though it's a business debt, right? Just because they may have their own personal debt, and they may have served as a personal guarantor on a lot of these business loans. So that's one of the factors we take in consideration. Business assets, the type of business a person has, right? I'm sorry, and the assets that they have. So I may view a brick and mortar different than I would view a consulting firm that just provides a service. So those are just some of the factors.
Okay, no, that was very helpful. Um, and can you explain briefly, like just the overall process from when they get started to when they're done with the whole bankruptcy?
Generally, I do a consultation. I evaluate to see whether or not they should file a bankruptcy. After that, let's say the person decides that they want to move forward with the bankruptcy. You sign a retainer agreement, get all the business aspect out of it, right? And then from the client intake process, they fill out a questionnaire. They're gathering their financial information. Based on that, we prepare the bankruptcy petition. These are the bankruptcy petition schedules and statements that get submitted to the courts, right? So once we gather all the information, and normally there's a 6-month look back, right? So we can request, let's say, bank statement, which they filed. What else? Pay stubs. We do a credit report, and anything that's not on the credit report, we make sure we include all the creditors that we know about. Once we do that, we sit down, we review everything. The client looks over everything, signs everything, and then we file. Once we file, we'll get something called a 341 meeting. This is actually the hearing for the bankruptcy, right? Right now, because the pandemic is actually they're doing it Zoom or over the phone. Typically, we would be in the courtroom, right? Just going over this. And when I say courtroom, not necessarily the courtroom itself, but small informal room where they ask questions and you're around other people that are filing for bankruptcy. And then I would say after the 341 meeting, 60 days after that, they'll get a date of discharge. that date of discharge or discharge letter, it means basically, hey, you have successfully completed the bankruptcy and you're not responsible to legally pay out these debts. That's the typical process.
Okay. No, thank you. That was very helpful. Now we're going to talk about more about people that own a home and people that, were wanting or are wanting to purchase a home.
Okay.
Of course, if people are having issues with, paying their mortgage payments, they can try to find other options with their loan servicing companies to work out a plan. And then a lot of people consider refinancing, right? Because they have equity in the house. Well, instead of selling the house, I want to keep the house. Why don't I just refinance because I more likely owe less than what the home is worth. But with everything going on, I think it's important to consider that people are racking on a lot more debt. So if they get in a position where they have too much debt to even qualify to refinance now, that may not necessarily be an option for them, right? So I think you talked about it a little bit earlier here, but yeah, I think you said exemption, right? Like maybe there's a possibility they won't absolutely have to sell their house if they have equity.
Right.
Can you talk more about that as well?
So basically, you want to know what are some of the options in order for them to keep their home once they're in bankruptcy,
Right.
basically. Okay, so with the Chapter 7, if there is a lot of exempt, or I should say, if there's real property that can't be exempt fully, then you run the risk of, a trustee saying, hey, we want to sell this property. We're on the chopping block to sell this property. That's an option, right? But you never want to be in a position where you're forcing a sale with the client. Generally speaking, Chapter 13s are options, right? Chapter 13 allows them to keep their home. It gives them an option to keep their home while actually kind of giving themselves the benefit of a bankruptcy, right? They're just paying on whatever they need to pay to stay in the home. A lot of times deals can be worked out with the trustee's office where they can over time make payments, on any unexempt property. I've seen clients do hardship modifications, right? So that's basically when they say, hey, we don't have any money, but we need to kind of put that on the back end, whatever we're owed or whatever we're behind on the back end. They have various programs right now because of the pandemic, or they did have it about roughly a year ago, where they would allow the opportunity for some of these clients to stay in the home, by helping them or giving them some form of assistance in their mortgage payments. And that's pretty much how it generally works. It's always a negotiation and a balancing.
Okay, that sounds good. People don't always have to sell, but that may be an absolute measure that needs to be taken. And so then, and we'll probably overlap the next question after this, but let's say someone does have to absolutely sell their home at the end of the day, and obviously want to have another home, they don't want to rent, or they can be an issue, possibly have issues with renting because they filed bankruptcy. Do they have any other options besides paying all cash for the home or getting land contract after they've had to go through that process to buy another?
Um, to buy another home, you're saying once they've completed it, or whether, let's say they don't have any remedies or anything.
Well, yeah, because like basically if someone had to sell the home, right, and they didn't really want to sell the home, but they had to at the end of the day, and ideally they want to have another house right afterwards. Trying to figure out what would be their other options. I know there's waiting periods when you file bankruptcy to get a mortgage. So is there any other options besides, paying cash, or cash options?
Okay, so let's say I have a Chapter 7 case, right? Generally speaking, if they're looking for another home, or looking, I should say, to mortgage another home, then they will wait between 2 to 3 years. I don't know if there's a private investor, depending on if they have a savvy real estate, they might be able to, real estate agent, they might be able to put something together to work something out, right? Based on, what that real estate agent could do for them, specifically for bankruptcy clients. And then sometimes in the Chapter 13, they can actually petition the court to ask, can they purchase another home?
Oh,
So, and there's a waiting period. And, of course, once you're in a Chapter 13, anytime you're trying to acquire any debt, you can ask for permission from the court to do so. Especially
okay.
if as long as it's above a certain amount. And different jurisdictions vary on that amount, but that's always an option as well.
Okay, yeah, no, that's good to know. I mean, only things offhand would be rent to own, land contract, and then, paying all cash. But at the same time, it can be difficult when someone has a bankruptcy on their record to get someone to agree to it. But there's always other paperwork and letters they can write to. But it's good to know there's options beyond just those things, because it does make it more difficult. Okay. And so I think you did talk about the difference between Chapter 7 and Chapter 13 and then the waiting periods. Is there anything you want to add to that, though?
I think I did too. I preliminary answered that question.
Yeah.
But just, chapter 7 versus chapter 13, you know, you basically, depending on when the client comes in, you kind of customize it based on their needs, what they're trying to do. Are they behind on their mortgage and they want to keep their home? Are they behind on their car note? Did the car get repossessed and they're trying to obtain the car back, and they have the means to successfully get caught up on the arrearage? So it just varies per client, if that makes sense. And that's part of just experience over time as well, just being able to horn in. A lot of times when I get these clients, I want to know your long-term goals as well. I want to know that you want to purchase a home in 2 years or start a family and purchase a home, because that's important. Because at the end of the day, once your bankruptcy is complete, I don't want you to feel shortchanged on the information. So knowing the information and having the information is very powerful when it comes to bankruptcy.
Okay. And then in terms of the business side, if you can discuss briefly, just the differences if someone has a business and it is structured as an entity, and not just self-employed. What is the difference if a business files Chapter 7, Chapter 11, or if they have a Section 363 sale?
Well, when a business files, it's, well, of course, in the business name, right? So if you do a Chapter 7, you want to be careful because there's assets. If there's assets, then those assets become the part of the estate. Chapter 11, of course, is a reorganization of a business. I always say, think of, a famous rapper out here who filed a Chapter 11, right? What it involves basically setting up a proposed plan for all your creditors. It's very complex, but it's doable if that's what you need to do as far as a business and you want to maintain. We did know that even with the pandemic, a lot of these big corporations, they file for a Chapter 11. So we're not the which like makes a lot of people feel comfortable. They're not the only person struggling with or just trying to make it like we all were trying to make it during that time, and we're still still feeling the ramifications for that.
Okay. No, that makes a lot of sense, because basically my understanding is that, and I think that's what you said, essentially, if they file Chapter 11, they then would necessarily they're not in a position where they're closing the business, still operating and all of that, but Chapter 7 they would be.
Correct. For the most part, depending on the assets in the business.
Okay. And so should we be concerned less about the Chapter 11 filings if most of them have been Chapter 11 for this year?
Of course, with any of these bankruptcies, they're not set in stone. I do believe that with Chapter 11s, creditors have the opportunity to object. It's generally they can object on various reasons. There's a proposed plan. If a creditor has, let's say, 50 creditors and 49 creditors object, of course, that can be problematic. So it just depends on the circumstances, the finances, and the situation.
Okay.
Specifically when it comes to that. And I hope I'm answering these questions to the best of my ability for you.
Yes, you are. I think the only thing that we left out was just the Section 363 sale. I know that's just is that just a faster process of Chapter 7?
Yes, that's just I believe that's just a buy, when they find a buyer for the property.
Buyer for the business.
Yes, correct.
Okay. That makes it clear too. Okay, no, you are answering the questions very well. I appreciate it. And so I'm sure you've had a lot of cases where people have filed bankruptcy, whether they currently own the home, they didn't own a home, but they've gone at some point, they did get another home and told you about it, I'm guessing. So if you've had a lot of those experiences, what would you say helped them the most to be in a position to successfully buy another home? Was it more so that they did FHA financing? Or did they do some things in the process to make sure their credit was in the best position when the time came?
I think it basically just listening. It's not enough just to do a bankruptcy. The days of just doing a bankruptcy, wiping out credit, they're gone, right? We have to learn what to do after the bankruptcy. Knowing what to do after the bankruptcy is critical. Learning how to rebuild your credit is critical. Learning how to get the credit, right? And doing what you need when you have the credit to start rebuilding is vital. So that's something that is very, very, very important. So that's going to determine your success moving forward. That's going to determine whether it aligns with your objectives. And that's actually taking full advantage of the bankruptcy.
Okay. Sounds good. That makes sense. I mean, we get clients all the time. If they don't listen and don't do things in a timely manner, then it does mess things up. So it's all
Correct.
about taking what you said and actually following through with it.
Right.
And can you talk more about, with the different forms of bankruptcy, how it impacts their credit, and how maybe if they file a business bankruptcy, depending on how it's set up, they may not have to, it may not affect their personal credit.
Okay, well, with the Chapter 7, of course, personal, right? Normally, when a person files for bankruptcy, it gives them a hard, it drops their credit score down. So it's a hard hit. We call it, per se, a hard hit. It's going to drop your credit down. And a lot of reason why you're in a Chapter 7, most of the time, by the time you're in a Chapter 7, your credit is always, already kind of low, but it gives it, we call it, gives it a big ding, right, to your credit report, right? And then after the bankruptcy, you're allowed to rebuild your credit, right? You can't file another Chapter 7 for another 8 years. Allows you to rebuild your credit. So you're going to get, maybe opportunities to get credit at higher interest rates because, your credit's still bad, right? So if you, but I always tell clients, hey, you still want to utilize being able to get that credit card or finance that vehicle, because although it may have a higher interest rate, it gives you the opportunity to rebuild your credit. So it's all about the rebuilding of the credit, right? Chapter 13 is a little bit different because they're making payments on it. So it doesn't hit your credit as hard and actually allows you the opportunity to sort of kind of rebuild your credit a lot of times while you're in there if you take full advantage of it. So I've seen clients be in a position where, they're given as long as they get permission per court, the court, if they need to, they're given an opportunity to get credit and rebuild their credit more, where they're going to see possibly an increase in your credit, which basically is not bad at all because you're actually, you're getting the protection of the bankruptcy court while you're being allowed to rebuild your credit. So those are some of the key things that are important. A lot of times also Chapter 7, going back to Chapter 7, clients are able to build their credit because their debt to income has decreased, right? Because they just got rid of their debt. So they're given the opportunity to rebuild it.
Okay.
So that's pretty much in a nutshell.
Yeah, no, that was very helpful. And then any just additional effective strategies that you would recommend people consider to minimize the negative impact of their bankruptcy and rebuilding their credit, or just to prevent having to go through bankruptcy?
Um, Rebuilding your credit after bankruptcy or rebuilding, well, most of the time you really don't have an opportunity. If it's in a 7, you kind of rebuild it afterward, right? Credit cards, authorized users. If you can't get a credit card, you might want to take the option of getting a secured line. You might want to see if you can get some kind of home builder's loan to give you an opportunity where you basically have to put up some money and you build, you're paying on it, but it's impacting your credit. My firm per se works with a credit repair company. Oftentimes, sometimes I refer them out so that they can, learn strategies, learn the usage of credit cards, just be educated. Once you're educated, you can probably take over the world when it comes to this, but you definitely want to take advantage of that bankruptcy. Like I said before, Chapter 13 is a little bit different. They could probably possibly be rebuilding their credit while they're in the 13, right? At some point in time. And then, as far as when I'm assessing whether a client should file for a bankruptcy or not, because you did ask that question, right? I just want to make sure I'm
Yeah.
answering. A lot of times it basically boils down to, the situation, the amount of debt, what they're trying to do. All these factors come into play. Are you being sued right now? Are you being garnished right now? Is this an emergency where you need to file right now? So there's numerous factors that come into play, but each client is different, right? They're similar, but they're different. So it kind of, like I said, goes to their objectives of what they're trying to accomplish and what they're trying to do in that moment, if that
Okay.
makes sense. And then sometimes it just doesn't make sense for them to file, right? It doesn't make sense. They may need to wait. Or, they can basically do other options like a credit counseling course. Credit counseling course, learn the credit counseling, learn how to be better with their credit. There's credit programs out here, so that might be a feasible option for them as well.
Okay. That all sounds good as well. So to kind of like wrap up here, um, it would seem that, the continued increase in bankruptcy filings will obviously for sure have an impact on the real estate market. But um, based on what you said and what we've gathered, it seems like it's going to depend greatly on who is actually filing for bankruptcy and the type of bankruptcy that they're filing. So, for example, will we have a lot more businesses filing more Chapter 7s and Chapter 11 bankruptcies? And if so, the people that are employed, how are they going to be impacted? Are these people who weren't really in position to buy a home anyway because they were mostly going to have to rent no matter what? If so, then we wouldn't have to worry about them not being there to buy a home because they weren't in a position to buy it in the first place. Or are these going to be people who they actually do own a home? And so now they're going to have to either find a way to downsize that makes sense to where if they downsize, it doesn't cost them more money, because a lot of people that currently live in a home and they've been there for a long, long time, if they're actually downsize, it would actually cost them more money to downsize. So therefore, they're staying in their homes longer. So then if it's those kinds of people, they wouldn't necessarily be in a position where it makes sense to sell, but they would have to sell, possibly. And they have the equity, and if they don't in a position where they're working, refinancing isn't going to work either. But then also if they're renting, these are all people that are mostly renters that are losing their jobs, then it's more about, okay, so the landlord situation, how will that come to effect with all these properties that where people are renting from? And then on the other side of things as a whole, it's going to really depend on are we going to have more people that have to sell their house, or are we going to have people who wanted to buy a house, but they can't buy now because they filed bankruptcy? So it's a lot of things in place to really make it difficult to determine what route, it's going to affect the market. And is it going to be next year? Is it going to be a few years from now? You know, so I want to get your thoughts on how you think filings next year and in the future will impact the market, because you see more of what kind of filings are actually happening.
I think you pretty much summed it up. There's going to be such a vast array of different scenarios that's going to play out, right? We know that the big boom is coming. We don't know if it's going to come gradually with these filings or whether it's just going to be a significant hike in these filings, right? Vastly from year to year, right? But you've encompassed everything that we can discuss, right? What are we going to do? What are going to be these moving trends? A lot of these issues are going to be arising right on the spot. And we're going to be dealing with them right on the spot. That's something that I don't even think we're going to be able to predict. We have our predictions. We're saying, hey, we know this is going to happen. We know this bankruptcy in the real estate market is entwined. We know that there is going to be a cause and an effect. We're just trying to figure out what this cause and effect is going to be. So I look forward, just like you do as a real estate agent, and basically, I'm up for the challenge, just like you. We want to see what's going to come out, and we're going to see how we're going to deal with these issues, because a lot of these issues, I think, are going to be new issues. I think it's going to be a new era. So a lot of these issues are going to be something maybe we've never seen before, right? What do we do now post pandemic to deal with these issues? What are we going to do? How creative are we going to be in order to get what we need done and reach our goals with these clients? And that's one of the biggest things we're going to look forward to. And I'm excited for the challenge. And I know you're excited as well.
So you're thinking that the processes will be different based on how things come up, because it will cause for that to occur.
I do. And I think it's going to depend on whether it's a gradual filing increase or whether it's going to be a big boom. it's a big boom, we're going to see something drastic, right? We're going to see something, we're going to see issues arise that we probably even didn't even think would come up. We're dealing in a whole new era. So, and possibly some new laws based on that. So it's really exciting to see, what's going on. I think that, like I said, I think the average client is a little bit more savvy. So this is going to be very interesting. I think that at some point in time, these filings are definitely going to affect the real estate market. Well, what is that going to be? Are you going to have to come up with creative structures for deals now? Or whether we can traditionally use the same things we've been doing for years and years to come. And that's the what if. And I think this isn't anything different than we've dealt with. We deal with it every day. We're just gonna maybe deal with it at a larger scale.
Yeah, no, I definitely agree with that. Because just this year alone, I've had come across some of the buying strategies that we just typically weren't dealing with before. For example, if a condo is non-warrantable, meaning that there's a lot of factors that could equate to that. And one of them is just people not paying their HOA fees. So how can someone buy that condo? How can the seller sell a condo if they really want it to get sold? Well, most people are going to want to have it where someone pays cash for the home. But another route that, these last 5-7 years, we haven't really had to consider is when someone actually takes over someone else's mortgage. So instead of the person that wants to buy the home having to go through their own mortgage company, and with interest rates, being higher than they have been the past few years, it can actually be advantageous for that buyer to want to assume that seller's mortgage. So for example, let's say the home is actually worth 100,000, but then the mortgage for the seller is 75,000. And when they bought it, they only had a 3% mortgage rate. Well, that's a lot better than paying 6 or 7 or 8%, right? And
Correct.
so if that buyer has a good amount of cash, well, maybe I don't want to pay all cash for the home and liquidate because I know I need to save some money here. Well, maybe I'll assume the mortgage for that amount and then I'll pay the rest cash and I have a low interest rate. So it's not really going to be that big of a deal for me to make those monthly payments with that mortgage. But the challenge with that is this year is that because a lot of people haven't done assumed mortgages in a long time, the infrastructure for the support to make that a seamless process is not there. The one that I had this year, it was going to be you were to expect a 4-month process from the time that they're ready to start the mortgage. And traditionally, once you have let's say a sale under contract, meaning they've accepted an offer on the house. Okay, well, they have their inspection period. And so after the inspection period, if it's a smooth transaction, you should really only need about 15 days left to close. And that's including an appraiser going out to the property, evaluating the property and having nothing flagged to get repaired but prior to closing, and the buyer doing what they need to do to close on time. So overall, a 30-day process, including your inspection. But with this assuming of the mortgage process, this is saying that you've already had your inspection, you're past that, you still need 4 months to close, and there's no appraisal.
Wow.
Because we already know that we're assuming the mortgage amount, and if they pay for more out of their own pocket, that's great. So you're wondering, okay, why does it take 4 months? Well, what I've had experience is it takes 30 days from when they submit a long list of paperwork, which is almost like closing paperwork, not even just like a regular loan package, that has to be completed with the loan servicing company. It takes them 30 days to prepare it for the buyer, which seems odd. Then they mail it physically to the owner of the property. They don't always mail everything to the borrower. Sometimes they will, but most times things go through the seller first. And then the borrower, the new buyer or new borrower, however you want to call it, has to fill out all this paperwork. They have to pay a couple of fees up front. And so when the seller's agreeing to this, they don't even know if the buyer is really qualified. I mean, they can run their credit report and all that, but 4 months down the line, when you're trying to close, are they still going to be in position? So you have that to deal with, and then you could fall apart during that process. And it's really key that if a seller is going to accept this, they want to make sure that their mortgage company is not going to hold them liable if the new buyer defaults. Because in some scenarios, if the buyer defaults on that current mortgage when they take possession of the house, they will go back to the previous owner and have
It
them.
reverts back. Wow.
Yeah. So it sounds advantageous, but it can be very cumbersome and not work out well for either side in some cases. But I was told that because more inquiries are happening, it will be a better process. How soon, we don't know. And then another scenario of buying that hasn't been as common recently is the ARMs, which is the adjustable rate mortgages, which we haven't seen those until recently. And it can make sense depending on the buyer, right? If you can get an adjustable rate mortgage at a much lower interest rate, let's say you're getting at 5% for the first 2 or 5 years versus a traditional mortgage now, maybe 6 or 7%, and you feel very confident that you can refinance after that period of 2 to 5 years, whatever the ARM period it is, then okay, that could make sense because okay, I'm getting a low interest rate now, and then I'll pay the new interest rate later. But we don't know what the new interest rate is going to be. And if you can't refinance, you're going to be fluctuating up and down either once a year or twice a year, depending on the rate. But so those are things that we're seeing starting to happen more. And that can impact greatly the process as well, because it's, 4 months to close is not fun.
Correct. Perfect.
So
That was an excellent point, with everything that's going on, the time crunch. Time is so important when it comes to these filings and real estate. Just making sure that everything, when you're dealing with clients, just a month thrown off can cause a problem in a bankruptcy. Does that make sense? So timing is always key, and you want to make sure that you stay ahead of the ball, not behind the ball. So
definitely.
very important.
Okay. And then do you just have overall advice for people who are on the verge of filing for personal or business bankruptcy that can put them in the best position?
Don't be ashamed. By the time people want to file for bankruptcy, like I said, they probably exhausted every avenue that they can. Don't be ashamed. And take advantage of the bankruptcy. If you're going to do a bankruptcy, take advantage of the full effects of the bankruptcy. It's not just the filing of the bankruptcy, it's what happens after the bankruptcy, specifically in the Chapter 7. And in the Chapter 13, it's more so what can I do to put myself in the best position possible while I'm in this 13 for whatever amount of time I'm in it. So that's my advice. And just looking forward to what the future holds for bankruptcy as well as real estate. This is going to be very interesting. It's going to be a great market at some point in time. And, we are going to be there to take the ride. So very excited, super excited.
Okay. Sounds good. Is there anything else you want to add on this topic at all, period?
No, we need to have more conversations, more information for clients to know, and just, knowing is half the battle. So just knowing what to do, how to do it, being informed in order to make an informed decision is very key and very important. So,
Okay.
and
Well,
we're gonna have a new year, 2024. So we're excited to know what
yeah,
the future holds. So
couple days away. Okay, so is there how can people connect with you if they're in need some help with any of this?
my Detroit business number is 313-500-5098. So just give me a call if you have any bankruptcy questions. We also have a website where you can set up consultation appointments. So, and I'll make sure to give you that link so that you'll have it to send it out. And any questions, there's not a dumb question, right? Whatever questions you have, we welcome them at my firm, and we are available to answer any questions, especially in the most troubled times. So give us a call.
Okay. Well, thank you so much for being here. It was a pleasure. I feel like we've provided a lot of value to people who aren't familiar or may be in need or just curious and have some real estate deals coming up that they want to be prepared for. So greatly appreciate your time, and I wish you the best in 2024.
Thank you as well, and I wish you the best. And definitely, we need more of these conversations. So let's make it happen.
Yes, yes, we have to do a part two follow up.
Follow up, definitely.
Oh, it
Cannot
looks
wait.
like someone just texted me that we have some questions. So let me see.
Cannot.
Okay, so it's someone asked, will being an authorized user on someone else's credit card who has good credit help in rebuilding credit score? Okay, so basically they're saying that, because you mentioned authorized user on someone's credit card. So someone that has good credit, she wanted to know if that will help that to clarify that actually does help them, the person that's become an authorized user rebuild their credit score.
Yes. So as long as when they make their payment, it's like you're making a payment, right? You're not on the account, you're just the authorized user. So it's not your credit per se, but anytime they make a payment, it's like you're making a payment. So it does assist with your credit score. So
Okay.
it's good to have an authorized, if you can find an authorized user, those are excellent. But you also want to make sure that you have your own credit cards as well. Combination of both assists with growing, getting your credit score where you need it to be.
Right. And there are some credit card companies that will work with bad credit to actually help you rebuild your score. I know some of them are Indigo, Milestone, Self,
First Progress, I believe. First Progress. And then some of them are not even in existence anymore. It used to be My Jewelers that, gave you a credit line that assisted. I don't think they're accepting applications this year. Grain, if Grain's still out there, Grain, it's like a credit line through your bank account.
Okay.
That's just throwing out a couple. I'm not endorsing any. I'm just saying those
Right.
are some of the feedback. That's some of the feedback I received from some of the clients. So
Yeah. Somebody should do their homework and research, but know that there are definitely some credit card companies that you can have for yourself. And then having authorized user on someone else's card will help you rebuild your credit a lot faster than just waiting for the debt to fall off.
correct.
All right. I think that was the only question that we had. Just to comment that was very good information, and rebuilding is critical. So again, thank you so much. We'll have to do a follow-up to see how we have evaluated everything in the maybe next sometime middle of next year. But thank you everyone for joining us, and I hope you have a happy new year.
Thank you.